Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, November 16th, 2011 is sponsored by Realtik. Alright, let's get right into the mix today, folks. The markets, again, all over the maps. It's a classic whipsaw Wednesday, which is the Wednesday before options expiration Friday. Usually you get some very crazy moves on this week, especially on today, Wednesday. That's exactly what we're getting today. The markets have just turned to the positive side. Dow up 3 points, Nasdaq up 1.7 points, and the S&P 500 just up slightly less than 1 point. So it's just a barely positive move, but you can clearly see this morning we had a nice little gap down on more worries out of Italy and Spain. We saw Italian yields going back above 7%, which kind of caused a little bit of a panic, but ultimately that was short-lived. The markets, again, opened up at their lows of the day, inched up, and then you got a classic in spirit of bullish pattern. And I actually talked about this in the intraday stock chat, calling it out to my members. And again, remember, folks, the intraday stock chat, there's a 7-day free trial. The research center, where I give out tons of swing trades and we go over charts and videos every single day, that also has a 7-day free trial. So you can take them, no obligation, no big deal. As long as you cancel before the end, you're not charged, very simply. And go to inthemoneystocks.com to do that now. But bottom line is, notice this pattern, guys. This is a classic pattern. A 3-bar up move into the 200 moving average. And then what you start to get is these big choppy sideways candles, slightly angled to the downside. Look at that flag pattern. That's an in spirit of flag pattern holding right around this lower white trend line. That's setting you up for a move higher. This is classic technical analysis based off proprietary methods here at inthemoneystocks.com. And sure enough, off to the upside you go. You get a beautiful 1, 2, 3-bar surge. Where do you go? Right to the green line, right to the 20 moving average, at which point you pull back. You pull back very nicely. Where do you go to? You go to the 200. Now, one thing I want to point out here for the learning and the educational portion of this video is please understand how the 200 on your first up move is resistance. You get a little bit of a pullback there. Then you go up the second time, which is considered a second hit. My members are learned in the ways of not playing the second hit. First hit's only when you're dealing with resistance and support. So first hit, you play as a short. You can easily short scalp that. You pull back. Up you go, then you start to come back in. Now you're above, you confirmed, which is another proprietary technique. Confirmation is something that I've taught, which we created here at InTheMoneyStocks.com. It tells you when a breakout is a true breakout or when it's a fake breakout. This was a true breakout. Therefore, when you confirm above the 200 moving average, your first hit on the way back down is now a buying opportunity because that's your first hit. So here was your first hit on the upside. This was your second hit. You don't short this one. It breaks through, obviously. Thus the technology and the key strategies here in the Money Stocks telling you. You go up, you confirm, therefore your first hit on the way back down, which is now support of the 200, is going to be a play to the upside. Sure enough, up you go, consolidate, and you break higher. Second hit of the green line right here is right here. Would you short the second hit or just the first hit like you got right here, which you had a beautiful pullback, which I also called out in the intraday stock chat? The second hit you would not short. Sure enough, you go right through it. You've come up to the gap fill. You've broken through the gap fill a little bit. You have a little bit of a bull run going on this afternoon, and you're off to the races. You'll have resistance right here at this pink line if you get there. I think I'll probably wait for this pivot high from yesterday to be the short, though, of the day. If it gets up there, I'll short it towards the end of the day. Volume, again, is on the lighter side. We've only done 116.8 million SPY shares on the day, which is very, very light. All right, let's talk about some other things. The small caps. What do we got going on in small cap land? First of all, you have to take a look at Pacific Ethanol, folks. Pacific Ethanol hitting $1.85 today. This was the hidden gem for October. 6 weeks ago, I gave this play out at 29 cents. It was my hidden gem feature. I feature in the Research Center. If you're a Research Center member, if you take the free trial, you get access as well. You get one hidden gem basically a month, assuming the market conditions are good enough. In October, I featured Pacific Ethanol at 29 cents. Today, 6 weeks later, the stock hit $1.85. That's a 450% return in 6 weeks. That's amazing, folks. Another stock I gave out a few months ago. I gave this out to webinar participants. If you had signed up for the webinar one particular month, I gave it a special small cap research report. It was also available for purchase for members, and the stock was ABIO. ABIO today had news. as predicted based on what I was seeing in the research that I was doing. Therefore, that was the research report. It was a beautiful base down here. The stock goes from literally $1.11 today to $2.45. That's an over 100% move on this play. An epic move. And again, those that purchased the report a couple months ago and those that took the webinar a few months ago and got this, they are making money like crazy. So that's just the small cap side. There are plenty of large cap opportunities out there. We can go back to the SPY here. Let's flip back to the SPY. You're getting a little bit of a pullback. You just punctured gap fill. You're coming back in there, and we'll see again where this comes back. If this pulls back to the 50 moving average and the green trend line, would it be a buying opportunity based on the methodology? The absolutely correct answer would be yes. Why? Because this was your first hit, you pulled back. Second hit, you go through. Then when you get through and you confirm, which you did confirm here, your retrace down to this area right here would now be a buying opportunity. It's the same replay as what you saw here, as this was a buy down here. All right? Here you hit the 200, pulled back, you broke through, confirmed. First pullback to the 200 is a buy. Learn the methodology, folks. Even if you don't even take any of the trades I give out, which are 8 of every 10 winners, you can make plenty of money that way. Even if you don't do that, you just learn the educational side. You learn the proprietary things that we've come up. Hedge funds have come to us and begged us to start working for them, folks. Personally, I make enough money trading on my own and helping you guys out there learn this stuff that I don't need that. I don't need that stress. But they've come to us. They've begged us. There's no reason to do it. I'll give these methods out. It's time to even the playing field for the average investor out there. Start learning these methods. Amazing stuff, guys. All right. In any case, the profits continue to roll in. Small caps today have been very, very good. Oil is having another big up day. We'll have to see how high this is going to go here. We just pierced the high of the day right there. We'll see if we come back in. A little bit of a tail right here on a pullback. Spot crude will close in about 40 minutes, though. So we'll watch that. Now, I am watching very closely natural gas, guys. I have to be honest. Natural gas, UNG, which is the ETF for natural gas, is very, very low on the charts. Look at this chart on the UNG. It is starting to look attractive to me. With oil above $100 per barrel, it almost makes sense, right? It makes sense that this could be a possible play. So I am going to keep a very, very close eye on the UNG. That may be something that I play on the long side, the not-too-distant future, and we see if we can't make some money off of it. I'll let you guys know via the hot charts and alerts, which is part of the Research Center. Make sure you take that 7-day free trial, folks. A freebie like that should not be wasted. You definitely got to take that. All right, looking at a couple other things. What else am I looking at? I'm still eyeballing First Solar, again, flat on the day. Markets are flat. I like the fact that this has stayed inside of this level here. This big red candle, the price has not really punctured the low end here, which is something that I am keeping a close eye on. I am not in this position yet either, but I am eyeing it very closely with oil above 100. Makes sense. If you think about it, oil above 100 makes sense that there should be alternate energy plays that start to do better because more people will start to look for alternate energy as a possibility, especially with how cheap solar is getting right now. You have to think demand may start to have a spike, and I do think this is a very interesting possibility going into the next few months. Now, I think this could be a trade that takes multiple months to play out, but once it plays out, you get 25% out of the trade very, very easily on FSLR. So I'm going to watch it again. What you want to see is you don't want to see it take out this level on a closing basis. You don't want to see it get below the 42.50 level. That would not be what you want to see at all. All right. Looking at some other plays out there, what else could we be looking at today? Let's take a look at JP Morgan. Financials remain weak, even though the market has come back. That's on the back of oil. Financials, JP Morgan still down 32 cents on the day. Goldman Sachs down $2.25. They have come off their lows, but still, it's not a good showing on Goldman Sachs or the financials out there. Not good at all. Though the leaders today are very clear. You have Exxon and Chevron, which is obvious based on oil's price movement. Those are helping the Dow Jones Industrial Average. And you also have a little bit of gain in Google today. Intel's up a little bit. Research in Motion. 3M is up nicely. Hewlett Packard. I mean, there's a lot of the older school type stocks out there that have been around for quite some time that are kind of old school plays that are doing pretty well today. Alrighty, guys. Take care. Come take the 7-day free trial here at inthemoneystocks.com. Start learning these proprietary methods, which will make you the best trader, one of the top 0.01% traders in the world. Forget 99%, you're in the 99.99% traders in the world. And this is swing trading, day trading, investing. It works universally. Talk to you soon, guys. Take care.